But first, the volatility in the global stock markets continues with President Trump's carousel of tariff measures. In the face of an economic meltdown today, Trump abruptly backed down on his reciprocal tariffs on most nations for 90 days. However, China was excluded, and the White House zeroed in and raised the tax rate on Chinese imports to 125%. The move appeared to have eased investors' fears as U.S. markets surged earlier today. Jason Gaidola joins us live with the latest. Good evening, Jason.
Good evening, Manise. It showed what a single sentence from Donald Trump could do to the stock market. Exchanges saw nearly double-digit gains today. However, the recent volatility leaves a risk lingering around as Trump begins to take on China in the trade war.
Nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it.
U.S. President Donald Trump has made China his primary tariff target today, after he gave the entire global market a reprieve and also hiked the levies on the communist regime.
Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing, I think.
At the White House this afternoon, Trump says he's imposing a tax hike up to 125% on China, effective immediately, hours after China boosted the duty on American goods to 84%. Trump claims that he will strike a trade deal with officials from China, as well as other nations, who the White House says are granted a 3-month pause from reciprocal tariffs, with a baseline rate of 10% on nearly all imports.
This was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. And that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors.
America's Treasury Secretary claims this is all about ally negotiations rather than major sell-offs in the financial markets.
Wish that we weren't getting into this sort of escalatory situation. It seems unnecessary. Talking to my friends, we're debating how much ChatGPT came up with this.
However, when trading opened today, Trump doubled down on Truth Social, urging that now is a great time to buy. U.S. markets then surged. The S&P 500 jumped to 7%, while the Nasdaq rose by more than 9%. Expensive stocks like Tesla, Apple, and more saw double-digit price jumps, following some sharp declines in previous days.
And the best way I can summarize it is just the difference between certainty and uncertainty. We get certainty when we have clear rules on what the cost of capital and the cost of doing business is going to look like. We got a little bit of that today with a 90-day pause in tariffs.
Meanwhile, the U.S. bond market shifted.
Now, typically, when we think bond markets and stock markets, they diversify each other. So when stocks go down, bonds go up. Bonds are like a safe haven during times of crises. But what was very interesting this morning is that stocks and bonds were starting to fall together. And that strikes me as potentially worrisome.
Trump says he was monitoring the bond market where prices fell and interest rates rose, but brushed off any concern.
You can think of the U.S. Treasury bond market as part of the foundational bedrock of the global financial system. And anytime you have large swings in the U.S. Treasury market, you're entering into territory that could lead to big problems in the global financial system.
Now, China did respond today by slapping restrictions on 18 U.S. defense suppliers from exporting military equipment to the U.S., disrupting a potentially critical supply chain.